All right. It's Phillip. And hey, today I just wanted to talk with you for a quick minute about short-term rental properties and just kind of go over this quick guide for successful short-term rental investments, okay? And I like to talk about like picking the best location. And a lot of you know that I'm a real estate investor first, right? So I've been buying and selling houses, went full-time in December of 2003, and got interested in real estate back in 1997 while I was still in high school, right? So I've got over 2 decades of experience. And what attracted me to the short-term rental space in the very beginning, about 4 years ago, back in November of 2017 is when I got started with really focusing on short-term rentals. And one of the things that attracted me to it was the whole rental arbitrage method. And if you don't know what the rental arbitrage method is, that's basically where you find a landlord that wants to rent a property in a location that you desire to have a short-term rental in, and you rent the property from them long-term, and then turn around and put it on Airbnb and rent it out short-term. And the arbitrage method basically means that the profit that you receive is the difference between what you're paying for in rent to the landlord and what you're bringing in income from Airbnb. And so when I got started, I did a lot of those rental arbitrage properties really quick. We ended up at, I believe, 17 properties. And I realized really quickly that, being a real estate investor for so many years, that I was basically being a tenant. I was giving the landlord all of the appreciation, all of the depreciation, all of the benefits for owning long-term rental properties, at the same time taking great care of the property because I wanted my guests to have a great experience. And I realized really quick that I didn't like the role reversal. I'm used to being the landlord, not being a tenant. And I slowly started shutting down those rental arbitrage properties and started focusing again on real estate investing. So when we think about picking the best location, a lot of times as real estate investors, we're doing a lot of marketing. We're doing some marketing to different areas that we're interested in flipping a house in. So naturally what happens is I don't really get to pick the exact location. I know I have a general area that I want to focus on. Like right now, we picked up a property in Galveston, but that came to me from a wholesaler. So now I am going to target some of my marketing efforts on Galveston Island to pick up some more beach houses, vacation rentals in a vacation destination. But this strategy also works with the normal houses that I normally would buy, fix, and flip, or that I would buy, fix, and rent out, or that I would buy, fix, and do like rent to own, owner financing things, right? So now I'm more focused on just getting the quality deal that I can fit into the real estate investing strategies that have always worked for me, whether that's buying below market, buying with terms, owner financing, subject to, and everything in between. So what I like to do is I'll find a property that also fits the investing mold, not just a short-term rental mode, right? So as long as the property can get, that I can buy the house below market, if it's a renovation, I can buy it cheap enough to fund it with hard money or private money, and then fix it up, and then turn around and put it on Airbnb instead of fixing it up to sell it or rent it long-term. So I'll buy it, fix it, rent it out, or put it on Airbnb, refinance it, and then just kind of consistently repeat the process. So always keep in mind what your goals are as far as looking for the best location. Now, as we all know, the short-term rental demand is really high. Ever since after COVID, even before COVID, the amount of people that want to travel and spend their nights in unique places instead of a hotel is constantly increasing. And then there's other things to consider. What I like to always say is like, hey, if there's hotels nearby, then your Airbnb is going to work. It doesn't have to be in a vacation destination. Another great location is near college towns and universities where you're going to have people coming in to watch the sports on the weekends and to visit, people that are going to college there. So it's always a great idea to be close to proximity where there's other hotels. If there's other hotels or work in the area, those are also great locations to focus your marketing on to generate those types of deals in those kinds of areas. And another thing to keep in mind is that we always want to boost our occupancy rate. And what does that mean? Boosting our occupancy rate means that we're trying to get as many bookings throughout the month as possible. I always like to do my evaluation based on a 50% occupancy. As long as I can get 50% occupancy in the month, and the amount of rent that comes in from 50% occupancy is going to cover my mortgage payment, my taxes and insurance, and also give me a profit. And I always like to calculate a good percentage in there for a property management company as well. Then I know that we're doing good. So if I put my decision before buying on, hey, this is what I expect the property to do with a 50% occupancy, whenever I can boost that occupancy rate to 60%, 65%, or 75%, then that's just going to increase my monthly positive cash flow. So always pay attention to different things that you can do and strategies with your pricing to where you can increase your occupancy. The next thing you want to also always consider is calculating your possible expenses and your return on investment, right? So after you locate the location that you want to do your short-term rental in, always pay attention to the expenses that come along with that rental income. So if your research shows that the property is going to do $3,000 a month, for example, on rental income, don't forget your expenses like your cleaning supplies, maintenance issues that come up, property management fees like I talked about before. Most property management companies out there charge anywhere from 25 to 35%. So calculate that in. And also remember that you're going to have utilities, you're going to have lawn maintenance, you're going to have internet, you have all of these different expenses that normally with a long-term rental you don't have. So what I like to calculate, because I do manage my properties myself, but I've built in for my own properties in my mind 20%. So I pay my own personal property management company 20% of the rental income to manage the property for me. And then there's all the other expenses like utilities and the such, right? So if you're managing yourself, you can make that 20% extra in your pocket, but I always leave that 20% in there for myself in case later on down the road I want to make the decision to be financially free with passive income instead of active income. And having that 20% already calculated into my expenses, it'll be easier for me later on down the road to continue paying my property management company or another property management company to take over that task. So that's one thing to definitely keep in mind. You also might want to consider just getting a property management company straight up, right up front, and calculating that 20%. And then I would figure another, 15% or so for your utilities, maintenance, and upkeep and things like that. But again, as you increase your occupancy rate, to increase your cash flow, to increase all of those things, it's really going to help. And also keep in mind, there's a lot of people talk about the cash on cash return. Like if I put up $20,000 to purchase this property and it makes me $500 a month for a year, that's basically $6,000 on a $20,000 investment, or let's just call it 25%. That's one of the returns that we receive. But a lot of people don't keep in mind the paper profits that we get that we don't actually see as a cash on cash return. So you have depreciation that you get to write off if you own the property. You get to write off the mortgage interest. You get to write off the property taxes. You get to depreciate the property if you own it over 27 and a half years. You get to depreciate your maintenance and repairs and things like that. And so yeah, it creates a lot of these different things that you get to write off on your taxes, thereby increasing your write-offs, which will lower your tax expense at the end of the year. So that's always something to consider on top of the cash on cash return. So that's basically what I've got for you guys today. I hope you like this way of me sharing these blog posts, and you'll see the printed blog down at the bottom here as well. But anyway, just as a takeaway, just to kind of recap, the number of investors is really continuing to increase, and more people are getting interested in the short-term rental industry, as I have. I went from renting houses and being happy with, $200, $300, $400 a month cash flow to basically turning every single one of these little houses into a cash flowing hotel, right? That's essentially what we're doing. We're running a hotel out of a house and increasing the profits, 2 times, 3 times, sometimes 4 times the amount that we would normally receive from running a long-term rental. So, I'm here just to add value, to teach you guys and to show you guys the things that are working best for me. So that way, if you ever decide that you want to get a coach or a mentor, that if you want to take this to the next level, if you want to learn from me, partner with me, we have so many different things and opportunities coming down the pipeline, that I want you to be a part of. So raise your hand, get a free 15-minute strategy session with me, and I'd love to go over different strategies and figure out a blueprint that works for you, because not everybody is in the same place. You're not where I'm at. I started 20 years ago, but guess what? That doesn't mean that you are left behind. That just means that you can take and learn from somebody's experience over 20 years and get started now where I'm at. And you don't have to take 20 years to figure it all out. When I got started, I was young. When I got started, I paid for coaching. I paid for mentors, and that's what helped me get to the next level. And it's my goal to help you get to the next level or to get started, whatever the case might be. So hit me up for a free 15-minute strategy session. I'd be happy to talk to you and see if we're a fit to work together, maybe partner together, and let's just see where it goes. All right. So get out there and make it a great day. God bless you. Thanks for watching.